following is an update and technical analysis on Meta Platforms, a company of the technology sector and internet content and information here off the Daily Interval, where we had some big headlines rock the trading session here on Friday with a report published by the Wall Street Journal, where the daily utilization of the application Threads has experienced a staggering decline of an alarming minus 70% crash in daily usage. And this notable decrease occurred just mere days after its initial launch. And one cannot help but wonder what might have precipitated a sudden plummet of this magnitude, where there could have potentially been artificial users known as robo users that were potentially already in place before a drop of significant usage, again, of the velocity of that drop, can only be explained with what's ever happening behind closed curtains there. And the gravity of this situation cannot be underestimated, where this has spurred memories of the infamous metaverse debacle and how quickly that collapse ensued and how easily it could be forgotten, where it is also very crucial to bear in mind that Mr. Zuckerberg, as successful as this company has shot to the upside, where you could also remember, if you've seen the Facebook movie in what some pundits called Censor Book, where Zuckerberg may have not had an original idea in his life. Enough of the rambling, and I'll dive deep into the technical aspect of this stock, where on the 14th of July, 2023, we're trading spot price 309.30 at a significant price multi-year gap resistance level. Just a continuous reactionary lows, reactionary highs, really across the entire spectrum of this level. Call it 316.71 price support. Big divergent high. It was time to scale in short, whereas you had this primary reactionary high up trend line off the November 2023, call it a multi-year of support level. And again, if we went on to knock that 316.71, that could be an additional scale in zone for a potential break, and watch for a clean break of this primary uptrend line, which would usher in a sell signal off this bearish rising wedge pattern. And here's the update. Thus far, the entire trade has been good for, call it a 6.3% crash there. And we are quickly honing in on the 50-day and 50 exponential moving average with an unfilled gap down below, where we have a Meta reporting earnings next week. So again, that could be a gamble into where you're going if you want to cover maybe a little bit before earnings. If not, you think that earnings report is going to come out really bad, then these are your additional next targets here. Whereas that first target has been hit at that 298.38 price support, and we slightly closed down below it. Huge volume out price indication around this range. Well, again, maybe a potential back test to this primary resistance level. And again, short sellers, bear traders want to defend that level really at all costs for that next move down for another 6.3% drop down to 276.32, which will coincide with the 50 exponential and 50-day moving average. Call it a dual line of support there. And I would suspect a potential bounce, maybe a active and or a quick day trade to the upside if we get that reaction. If not, melt right through it with this volume at price gap in between, and that would be a very quick move down below to, in my opinion, down to that 258.94 price support. That it'll be a big key inflection point to watch, in my opinion. Call it a multi-year support there, support zone, cuts right through the 2020 period there. And we'll zoom out to the weekly interval. And whereas I see it as weekly significant psychological support there, where if we take that level out, you will be honing in and a re-challenging of the 200 weekly moving average there. So that is a very significant support zone level, in my opinion, and additional targets for any long-term investors. If you believe in Meta in the long term, you believe in Mark Zuckerberg in the ultra long term, these are your key levels to hone in on, and dollar cost average down your trade. So we'll see what happens, but that is as significant as a potential sell signal as you can possibly get here on the daily interval, with already confirmed bearish crossovers on the moving average convergence and oscillator, with the oscillator histogram already printing a nice, clean, solid red candle close below that zero line threshold. And that is as good as a sell signal as you can get there on the daily interval.